Welcome back to the Dinar Daily. We have a compelling story for you today that's been developing beneath the surface of the mainstream financial world. If you're a Forex watcher or an investor who has kept an eye on currencies like the Iraqi Dinar or the Vietnamese Dong, this is a topic you'll want to pay close attention to. These two currencies have long been subjects of discussion in specialized circles, often dismissed as speculative assets. However, what's transpiring right now suggests a significant shift in their status, a shift that is beginning to attract the attention of major financial institutions. For many years, the Iraqi dinar has existed largely in a realm of its own, a so-called ghost currency that only circulates within a small, dedicated community of online forums and niche trading groups. Its lack of significant presence on major global Forex platforms has kept it off the radar for most casual traders. Yet recent signals suggest this era of obscurity may be coming to an end. Quiet, subtle movements on financial terminals are pointing to a new level of interest from institutional players. These aren't the kind of changes that make headlines. They're the behind-the-scenes adjustments that precede major market events. These subtle signals are not just isolated incidents. They're part of a larger, more coordinated pattern. Algorithmic trading bots, for example, have been observed running tests on IQD-USD pairs. These automated systems are essentially stress testing the market, simulating how the currency would perform if it were fully active on major Forex exchanges. This type of activity is highly indicative of preparation for a larger, real-world deployment. It's the kind of meticulous planning you would expect from major financial entities, positioning themselves for a future event, rather than from individual retail traders just dabbling in a speculative asset. The Vietnamese Dong is following a similar trajectory, though its movements are perhaps even more discreet. Central banks and key regional financial players are showing a calculated and deliberate interest in the currency. This is not the typical noise you'd see in day-to-day trading. It's a deliberate signal, a kind of warning shot to those who understand the language of the financial elite. The reappearance of IQD trading pairs on smaller, secondary Forex brokers is no coincidence. These platforms, often used for institutional and regional testing, are quietly reinstating the dinar, a silent relisting that goes unnoticed by the casual observer. What makes this moment so compelling is the coordinated nature of the activity. Over the last few weeks, trading bots and liquidity analytics have picked up on an unusual series of spikes in both IQD and VND derivatives. These aren't random market fluctuations. They are algorithmically planned tests designed to gauge market reaction before the currencies are exposed to the full public glare. For anyone holding either of these currencies, this is a clear indication that smart money is already on the move. Getting an early position could be a defining factor in whether you're a part of the opportunity or simply an observer watching a historical event unfold. Timing is absolutely critical. And then there's Wells Fargo. A major institution like Wells Fargo is rarely one to speak on a speculative matter. They recently broke their silence on the Iraqi dinar, an action that is, in and of itself, a seismic event in the financial world. They've reportedly confirmed for the first time that the currency is under serious review, which is a powerful statement. Large banks and financial institutions typically stay quiet until they have verified information or until their own positioning is already underway. Their acknowledgement suggests that the currency is being prepared for a more prominent role, and institutional players are already acting on that information. For those who have been waiting for a signal, this is a noteworthy one. Waiting for official confirmation from mainstream news could mean missing the initial wave of a currency transition. History has shown that the earliest participants in such currency reevaluations are the ones who have experienced the most significant returns. This isn't about speculation. It's the financial world's equivalent of watching the opening moves of a chess match, where every single move is calculated and every second counts. The subtleties in the market signals are now beginning to form a clear picture for those who know how to interpret them. Let's discuss these market signals in more practical terms. Over the past few weeks, Forex terminals used predominantly by institutional traders have shown small but consistent volume spikes in the IQD USD and VND USD pairs. These movements are algorithmically coded, signifying a strategic accumulation by players who possess both the capital and the political foresight to make a move. When you examine liquidity feeds, derivatives activity, and over-the-counter contracts, it becomes clear that these are not random trades, they are carefully executed prepositioning maneuvers. This quiet accumulation is being carried out by a range of significant players. Central banks, private investment syndicates, and large hedge funds are all reportedly buying, testing, and preparing for a major currency adjustment. What truly sets this moment apart from previous years is the scale and coordination of the effort. In the past, only a handful of speculators might have been aware of dinar moves, but the current activity indicates synchronized institutional action. This points to an impending global currency event where both the Iraqi dinar and Vietnamese dong could unexpectedly take on new importance in the global financial system. One of the most important questions is, why now? The timing of these developments is not accidental. Iraq has been making substantial progress in modernizing its banking systems and updating its international trade policies. They have been working to meet the compliance benchmarks necessary to support a stable and tradable currency on the world stage. Meanwhile, Vietnam has been quietly strengthening its gold reserves and building key partnerships with regional financial networks. These deliberate strategic moves suggest both nations are ready for a potential revaluation. In foreign exchange terms, this readiness means the currencies are in the process of transitioning from being suppressed or niche assets to becoming actively tradable instruments. Institutional traders have certainly taken notice of these underlying changes. Their quiet positioning is an effort to capitalize on this shift for maximum gain. For those who hold IQD or VND, understanding the context behind these maneuvers is essential. The market isn't just reacting to a headline or a rumor. It is preparing for a fundamental structural change that could redefine how these currencies are valued and traded around the world. The involvement of Wells Fargo is particularly noteworthy because their acknowledgement acts as an unofficial confirmation from a highly credible source. It suggests that elite financial institutions have already started to act on the information they have. Wells Fargo's previous silence was likely strategic, designed to ensure that the vast majority of retail investors remained unaware while insiders discreetly adjusted their positions. This kind of institutional behavior is consistent with past currency events where early access and timing were the determining factors for success. For investors holding IQD or VND, this is a signal to review their holdings, verify their documentation, and understand their options for storage and redemption. The moment a major bank breaks its silence on a topic like this, it often marks the shift from hidden accumulation to broader public exposure. From a Forex perspective, the activity we're seeing goes beyond simple buy and sell orders. The use of algorithmic simulations, liquidity mapping, and derivatives testing indicates that these currencies are being prepared for wider market participation in a controlled and deliberate way. Trading bots are now analyzing potential price curves for the IQD, USD, and VND, USD pairs, running scenarios that reflect real-world exposure and potential price points. The goal of this prepositioning is to ensure stability and minimize volatility when the currencies are eventually reintroduced to public and regional trading platforms. While these tests may be invisible to the average retail investor, they are crucial signals for those who understand the larger market narrative. They are a sign that the groundwork is being laid for a significant event. The reintroduction of the Iraqi dinar to Forex terminals is also tied to Iraq's larger economic strategy, which involves leveraging its vast oil and energy resources. There have been increasing discussions in private financial circles about IQD-backed oil settlements. If Iraq begins to settle oil trades in its own currency, the dinar's role would fundamentally change. It would transform from a domestic currency to a global settlement utility. This is a completely different class of currency activity and would have a substantial impact on its valuation. This is a critical shift to understand. The dinar is moving from being a purely speculative asset towards becoming an actively relevant market instrument, and institutional players are getting ready to capitalize on this change before the world at large even takes notice. Vietnam is on a parallel path with its dong, building up gold reserves and integrating digital financial systems to support its regional economy. The country is quietly positioning the dong as a competitive regional currency, and while these developments are less publicized, their implications are enormous for investors. A stronger dong could significantly influence Southeast Asian trade, providing a more stable alternative to other regional currencies and opening up new investment avenues. Institutional investors are watching these patterns closely, and their early positioning is designed to allow them to benefit from these shifts before retail awareness catches up. For individual holders of these currencies, understanding these macroeconomic moves provides a rare opportunity to make informed decisions based on underlying shifts rather than simply reacting to news after the fact. The broader geopolitical context of these developments cannot be ignored. Both Iraq and Vietnam are actively aligning with alternative trade frameworks that operate outside of the US dollar-dominated system. Iraq's engagement with BRICS plus countries and Vietnam's strengthening of regional partnerships reflect a wider global strategy to diversify currency exposure. These movements suggest that the shifts in the dinar and dong are not isolated events but are part of a much larger global trend towards commodity-backed and digitally integrated financial systems. Major financial institutions, including hedge funds, private wealth syndicates, and big banks, are strategically positioning their assets to benefit from this global realignment. For investors, recognizing this context transforms the conversation from one of pure speculation into one of strategic opportunity. It's a key piece of the puzzle that explains the why behind the quiet accumulation. This is an era where understanding the big picture can provide a significant advantage. The silence from mainstream media outlets is often misinterpreted as a sign of indifference. In reality, it can be a deliberate tactic used by elite institutions to manage public reaction and market behavior. In the case of IQD and VND, mainstream news may be underreporting or delaying updates, which keeps retail participants in the dark while insiders act. Understanding this tactic is crucial for anyone holding these currencies. The likely scenario is that any revaluation will be phased and controlled to prevent market shocks and maximize institutional gains. Retail investors who can anticipate this pattern are better positioned to act effectively when trading windows open. According to leaked internal updates, significant movement could occur within the next few months. There are reports of early access contracts, Tier 4 BIA redemption centers, and private exchange mechanisms already being in play or imminent. These mechanisms would allow institutional participants to trade at rates significantly higher than what might eventually be publicly available. The key takeaway is simple. For those holding IQD or VND, preparedness is essential. This preparedness means ensuring the authenticity of your currency, having proper documentation, and understanding your access points for redemption or exchange. Waiting for public confirmation could mean missing a key window. Blockchain and digital currency frameworks are also increasingly influencing the positioning of both the dinar and the dong. Iraq has reportedly partnered with a fintech group to create a digital dinar environment for its oil exports. Meanwhile, Vietnam is piloting cross-border digital settlement programs with neighboring countries. These initiatives align with broader international discussions on digital financial integration and suggest that these currencies may not only be revalued, but also integrated into a modern, technologically driven financial system. Investors who understand these innovations are better equipped to anticipate both the opportunities and the risks that lie ahead. For Forex traders, this means IQD and VND are no longer just fringe speculative instruments. They are transitioning into currencies with real strategic importance. The quiet accumulation by institutional investors, hedge funds, and banks is done in small increments to avoid public attention. These positions are not random. They are the result of careful analysis of policy changes, central bank updates, and geopolitical shifts. Early accumulation often precedes major currency moves, giving insiders the advantage of timing and scale. For retail holders, recognizing the signs of this accumulation can provide valuable insight into the potential timing of future revaluation or trading opportunities. History offers some compelling parallels. The Kuwaiti dinar revaluation in the 1990s caught many investors by surprise, and those who held on were rewarded. The strategies of controlled rollouts, institutional prepositioning, and media silence all suggest that a similar approach may be underway with the IQD and VND. Awareness, verification, and readiness are key components of a successful approach. The current market environment may represent a rare opportunity, highlighting the need for informed action rather than reactive speculation. For those seeking actionable steps, the focus should be on verification and preparedness. It's crucial to confirm your currency holdings, ensure you have the proper documentation, and understand your access points to redemption centers or trusted brokers. Following verified intelligence updates rather than rumors or social media chatter is essential. Being prepared doesn't guarantee a specific outcome, but it does ensure you are positioned to respond effectively once a revaluation or increased trading exposure occurs. The timing and your readiness remain critical too. Capturing any potential gains, finally, the opportunity presented by the IQD and VND goes beyond just financial gain. These developments highlight a broader shift in global currency dynamics, moving towards greater regional integration, commodity-backed settlements, and digital financial systems. Understanding these trends equips investors with insight into both the immediate opportunity and the evolving financial landscape. While Wells Fargo's recent comments provide a form of official acknowledgement, the real story is in the quiet, behind-the-scenes movements that are shaping the future of these currencies for both holders and observers. The next few months may define one of the most significant currency events in recent memory.